If you're 65 or older, something changed this year that is quietly touching your tax bill, your Medicare card, and the future of your Social Security check, and almost nobody has sat you down and explained it in plain English. Before I show you exactly what it is, hit that subscribe button right now, because what I'm about to walk you through is the kind of thing that gets buried in 50 pages of legal language on purpose, and you deserve to hear it from someone who's going to say it straight. I know what it's like to open a letter from the government and feel your stomach drop before you've even read the first line. I know what it's like to do the math every single month, moving $20 from one column to another, wondering if this is the year the numbers finally stop working. You worked 30, 40 years. You paid into this system out of every paycheck you ever earned. And now, when you finally need it to hold up its end of the bargain, it feels like the rules keep shifting under your feet without anyone bothering to explain why. You are not imagining that. You are not losing your grip on things. The system really is more confusing than it needs to be. And if you've ever felt talked down to by a government pamphlet or a call center script, I want you to know that ends right here, right now, on this video. There's a new tax law that passed this year. And depending on what you've heard, you might think Washington finally stopped taxing your Social Security check altogether. I need to tell you right now, that is not quite what happened. What actually happened is more specific, more limited, and honestly, more important for you to understand correctly, because getting this wrong could cost you money or make you think you're covered when you're not. Stick with me, because in a few minutes, I'm going to show you the exact income number where this benefit disappears completely, and it might not be where you think. Let's start with what this new law actually does, because the details matter more than the headlines. Back in July of this year, a sweeping piece of tax legislation was signed into law, and buried inside it was a brand new deduction, just for people 65 and older. If you qualify, you can deduct an extra $6,000 from your taxable income. And if you're married and both you and your spouse are 65 or up, that doubles to $12,000 on a joint return. Now, that sounds like a straightforward win, and for a lot of middle-income retirees, it genuinely is. But here's what the ads and the mailers won't tell you plainly. This deduction is not permanent. It's scheduled to run for 4 years, through 2028, and then it disappears unless Congress acts again. And it is not a check in the mail. It's a deduction, meaning it lowers the income the IRS taxes you on. It does not add money directly into your bank account, no matter what some of those flashy online ads are implying. If your income from all sources is modest, this could mean you owe little or nothing in federal tax on your Social Security for these next few years. That's real, and it's worth understanding fully. But here's the part that catches people off guard. And I want you to really hear this next part, because it affects whether you get any of this at all. This deduction starts phasing out once your income crosses $75,000 if you're single, or $150,000 if you're married filing jointly. Once you're above that line, the benefit shrinks fast, and if your income climbs high enough, it disappears completely. Nearly half of seniors in this country won't feel much benefit from this deduction at all, simply because their income is already low enough that they weren't paying much federal tax to begin with. So if you've heard someone say Social Security isn't taxed anymore, I want you to correct them gently, because that's not accurate. The underlying tax rules on your benefits haven't changed one bit. What changed is a separate deduction sitting on top of it, with an expiration date attached. Now, I promised you I'd come back to something surprising, and here it is. That same piece of legislation that gave seniors this new deduction also pulled money out of the very trust fund that pays your monthly Social Security check. Because the deduction reduces the tax revenue flowing into the system, independent analysts now project that the Social Security Trust Fund could run short about a year sooner than previously expected, moving the date up toward 2032. Let that sink in for a second. If Congress doesn't act before that fund runs low, the law on the books today says benefits would automatically be reduced by roughly 20% for everyone, unless lawmakers step in first. I'm not telling you this to scare you. I'm telling you because you deserve to know what's actually happening to the fund you paid into your entire working life. instead of finding out about it after the fact from a headline that assumes you already understood the fine print. You still with me? Because there's more, and this next part touches your Medicare card directly, not just your tax return. Under this same law, the rules around who qualifies for Medicare got tighter. Coverage is now restricted to U.S. citizens, green card holders, and a small number of other specific legal categories, which means some longtime legal residents who previously had Medicare coverage are losing it within 18 months of the law taking effect. If you or someone in your family falls into a gray area on residency status, this is worth checking into immediately, not waiting on, because the clock is already running. And here's a quieter change that affects some of the lowest income seniors among us the most. Back in 2023, a rule was put in place to make it easier for low-income seniors to enroll in something called Medicare savings programs. These are programs that help pay your Medicare premiums and out-of-pocket costs if your income is limited. This year's law suspended that easier enrollment process. It didn't eliminate the programs themselves, but it did make the on-ramp harder to find and harder to navigate, right at the moment when the people relying on it need it to be simple, not complicated. If you're on a tight fixed income and you've never looked into whether you qualify for help with your Medicare premiums, please don't assume the door is closed. It's still open. It's just gotten harder to find the handle, and that's exactly why I'm telling you about it here. Now, let's talk about something that has nothing to do with this year's new law and everything to do with a mistake I see millions of seniors make every single year, silently, without ever realizing it. It's about when you actually claim your Social Security benefit and how that one decision follows you for the rest of your life. Here's the part almost nobody explains clearly. Every single month you wait past your full retirement age to start collecting, your monthly check permanently grows, roughly 2/3 of 1% bigger for every month you delay, all the way up until age 70. Wait the full extra years, and your check could end up around 30% higher than if you'd started at full retirement age and dramatically higher than if you'd started at 62. On the flip side, if money is tight and you start early at 62, that reduction is also permanent. It doesn't correct itself later. This is not a small technicality. This is potentially tens of thousands of dollars over the course of your retirement, decided by a choice a lot of people make without ever being told what it actually costs or earns them.
And if you're still working while collecting early benefits before you reach full retirement age, there's something called the earnings test that can temporarily withhold part of your check if your income crosses a certain threshold. I want to be clear, that money is not gone forever. It comes back to you later in the form of a higher monthly benefit once you reach full retirement age. But if nobody explains that to you in the moment, it feels like the government is simply taking your money. And that fear alone stops people from working when they could genuinely use the extra income. Here's something I promised I'd circle back to, and I think you're going to want to sit up for this one. Millions of widows, widowers, and even divorced spouses are leaving survivor and spousal benefits on the table every single month, simply because nobody at the Social Security office volunteered the information. If your spouse passed away, you may be entitled to a survivor benefit based on their earnings record, and depending on the numbers, that could be higher than your own benefit. If you were married for at least 10 years and are now divorced, you may still be entitled to claim on your ex-spouse's record without it affecting what they receive at all. These benefits are not automatic. Nobody calls you up and offers them to you. You have to know they exist, and you have to ask by name at your local Social Security office or through their website. I have to be honest with you. It makes me angry on your behalf that this isn't explained clearly the first time, every time, to every single person who qualifies. One more thing before we bring this all together, because it affects your bottom line every single month, whether you notice it or not. If you're enrolled in Medicare Part B, your premium is typically deducted directly from your Social Security check before that money ever reaches your bank account. For 2026, that standard premium is rising to just over $200 a month, up close to $18 from the year before. So when your cost of living adjustment comes through and it feels smaller than the news made it sound, a real part of the reason is that Medicare premium increases quietly eat into that waste before you ever see it. That's not a conspiracy. That's simple math that almost nobody walks you through in plain terms.
So here's where all of this leaves us.
You worked your entire life and paid into this system in good faith, and you deserve every single dollar that's rightfully yours. Not because someone is being generous with you, but because you earned it. The rules changed this year in real documented ways, some helpful, some concerning, and almost none of it was explained to you clearly the first time around. That's not your fault. That's a system that too often assumes you'll either figure it out or give up trying. Here's what I need you to do next. If this helped you understand even one thing more clearly than you did 5 minutes ago, subscribe to this channel, because I'm going to keep breaking down exactly what's changing in plain language, without the jargon and without the sales pitch. And please share this video with your spouse, your sibling, your neighbor down the street, anyone you love who's navigating this same maze on a fixed income. You might be the only person who ever explains this to them clearly. That's not a small thing. That's protecting someone you love. Take care of yourself, and I'll see you in the next one.